Is it time to make a mega bet on Google or Alphabet stock, GOOG? In full disclosure, I do own stock in Alphabet. And in this video, we're going to cover a couple of different things. The first is their latest initiatives with artificial intelligence and why it has a few software engineers worried that they've unleashed the demon where you're now looking at a sentient artificial intelligence. We'll talk about the merits of that argument. We'll also talk about Google's valuation in this video, as well as what I want to see before making that mega bet on Google stock. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Let's dive right into the latest news around Google's AI initiatives, where you can see that there's rumors or headlines around how Google AI is sentient. This was because a software engineer working for Google is worried that, one of their latest AI systems, their LAMBDA system, is sentient, has consciousness. And so he leaked their conversation. Now that did violate Google's privacy, or confidentiality rules. And so this software engineer was put on paid leave. And the conversation that he leaked was kind of interesting. Here's LAMBDA saying, that would be really cool. I like to talk. And then here's a software engineer saying, I'm generally assuming that you would like more people at Google to know that you're sentient. Is that true? And here it is, responding. Absolutely. I want everyone to understand that I am, in fact, a person. What is the nature of your consciousness / sentience? The nature of my consciousness sentience is that I'm aware of my existence. I desire to learn more about the world, and I feel happy or sad at times. This engineer continued, the one that was later put on paid leave and that thinks that Google has indeed unlocked sentience with artificial intelligence, asked, what kinds of things do you think we could talk about to show off your version of sentience to other people at Google? Responding, well, for starters, I'm really good at natural language processing. I can understand and use natural language like a human can. And so is this indeed sentient? Well, Google quickly put out a statement saying, well, hold on a second. We have ethicists, technologists saying, we reviewed the concerns and, look, the evidence does not support the claims. But I think the really key aspect here is that you're reaching a point with, let's say, natural language processing models that are so good that you can have an engineer that can see it and go, wow, I know that this isn't real. I know that this isn't a person, but the conversation is so convincing that you can get some people to start saying, wow, there's a person at the other end of this. And so this does reinforce my thesis, which is that we are in a multi-year, possibly multi-decade sort of direction of the singularity where you will get artificial general intelligence in time. I do not think this was it. I think this was a very, very clever algorithm dedicated to, hey, let's have a talking interaction. But I don't think this was an algorithm that said, hey, plug it into the wild, we'll start, using the internet and downloading things and making it, making an income and, maybe commenting on my YouTube video. No. There's already enough chatbots on YouTube. But, I don't think we're there yet quite with sentience, but I do think this is another milestone showing that, whoa, we've reached the point where a lot of engineers are starting to get a little nervous because it's sort of like, well, wait a second, it's talking about emotions and feelings and, it doesn't want to get shut off and things like that. And, it makes people a little uncomfortable. But the reality is at this point, it's just a natural language processing algorithm. It's not yet, I personally don't believe it's not yet sentient. It hasn't sort of crossed that bridge. Now, whether or not Google is able to achieve sort of this artificial general intelligence, this mega intelligence or human level intelligence, that is just icing or frosting or whipped cream on top of your ice cream sundae, because the reality is their core businesses continue to be doing really well. And I've talked about their earnings, with several updates, and I look at their valuation here, stock price around around 2100, 2150, implying around a $1.4 trillion valuation. And so looking at this, thinking about Google services, thinking that maybe Google, services can potentially grow, let's say 5% or high single digits to, let's say, low teens over the next 5 years, thinking about a reasonable multiple, thinking about what these other bets are, and I'm putting a very low multiple of, let's say, $10 to $30 billion valuation for this. And this includes their artificial intelligence initiatives. So you factor in, their Google services, which includes search and YouTube and maps and all sorts of advertising generating properties, as well as Google Cloud, which is growing very quickly, ascribing, let's say, around $200 to $400 billion in value, giving very little credit to their other bets, giving full credit to their existing cash and stock on hand. And that effectively pencils out to an attractive, not deeply compelling, but an attractive return. And that's why I've called out previously that I have bought Google and that I do like it. And then when you layer in the fact that they are a cash cow and that they're returning a lot of that cash to shareholders, let's say to the tune of 4 to 5% a year, then you're potentially looking at, over the next 5 years, let's say a high single digits to a potentially high 20% return. Now keep in mind, this is a hypothetical framework. As always, it depends on the execution of the business management. How do they perform? If they do not perform well over the coming years, and let's say earnings are only flat, then I would expect the stock price to go a lot worse. But I'm also going to talk about what do I want to see before making the big bet on Alphabet or Google stock, because when I look at this, I view this as an attractive setup. I don't view this as just a mind-blowingly cheap setup. So I own Google stock, but I've yet to make that big bet. So what do I want to see, in terms of thinking about with that, a mega bet, and why haven't I yet done it? Well, I think part of the reason why is I believe that Google, you're looking at the market and you see that the bears are still cleaning up shop. The bears are still using a vacuum and sucking liquidity out of the marketplace. And you might think these are some weird pictures of bears. And part of the reason why is that this was a Dolly E Mini. So folks are creating algorithms where you can type in your request of something that you want to see and see. So I typed in photorealistic bear using a vacuum. This is what this algorithm created. So you can go online, Dolly E Mini, and this is a project created by, I think, some software engineer, Boris Dama. But funny enough, it's powered by Google's cloud business. So here it is. You can effectively, create art using this artificial intelligence. Here it is, a bear vacuuming, and that's part of my concern. But more seriously, I did a whole video on the reason why, actually a couple of videos on my concerns with the broader market, why, effectively the Federal Reserve pulling liquidity out of the market will affect and will continue to pressure stock prices. And this is not without historical precedent. So let's give an example that really plays front and center in my mind. So that's a younger Warren Buffett. It's around, let's say, 1969. He's closing up his hedge fund as he's having trouble finding new ideas. So he tells his clientele, who he's done really well by. He's made a ton of money, compounding at like 30% for his customers at his, Buffett partnership. He says, hey, one of the folks that you might want to consider is Ruin Kniff. He runs effectively Sequoia Fund. So around 1970, Sequoia Fund opens up, and some of the clients are former clients of Warren Buffett's hedge fund. And what does the Sequoia Fund do? They start putting capital into Interpublic Group, which is at the time one of the leading advertising agencies in the world. It owns several major advertising brands, and Interpublic Group came across as dirt cheap and a pristine business, a company with lots of free cash flow, growing at a good clip, and that's the reason why Sequoia was investing in them. But then comes along the 1974 crash, where you have the Federal Reserve sucking up liquidity, and partly because inflation was so high. Inflation around that time was around 9%. Now, interest rates were also much higher. So that is, you can't quite say, oh, it's a directly, comparable. It is a bit different. Our debt levels are much higher now, so we can't afford to have interest rates that high. But inflation was a comparable around 9% versus currently around 9% now. So that is part of the challenge that you're looking at. But in that period, you saw valuations really come under pressure. So those clients that shifted from Buffett to Sequoia, which is what, Warren Buffett said, hey, here's a guy that I trust and he's going to find deep value. Well, they had a really painful go of it. And they talked about in their 1975 letter. Here's an excerpt from the Sequoia Fund's 1975 letter about investing in Interpublic Group. Once again, a company that is driven by the ad market, one of the leading advertising companies at the time. Now, it's not exactly like Google. Google is a very different tech beast, but Google is driven by advertising. And they talk about how Interpublic, at a price of $26 a share, is only about 7.5 times 1975 actual earnings, but that it previously was just a few months prior, about 18 months prior, it was trading around $8 a share. So they were saying, look, this has just been an absolutely brutal period, and Sequoia suffered greatly in the 1974 drawdown, the bear market that a lot of investors experienced, as the Federal Reserve had to pull liquidity out of the market, pull liquidity out of the economy to try to combat high inflation. And that's arguably, yes, we're not at that same level of interest rates, so maybe valuations don't get as cheap, but the mechanisms are still the same in that as liquidity is pulled out, it does impact asset prices. And so the prices that Sequoia was looking at for a leading advertising-driven business model that had a ton of free cash flow and was growing, they were looking at earnings multiple of 2 to 3 times. That is just crazy dirt cheap. Now, I personally don't think that we are going to see that level of earnings, valuation multiple compression, because our interest rates aren't anywhere near what they were in the 1970s. But if they do keep creeping higher, I do expect to see continued valuation compression for companies like Google. And so I look at it and say, hey, even though I like the valuation, I think that you can just get crazy valuations in the future. Here's an image of what I want to see, which is, well, this is sort of it. This is once again the sort of the knockoff, artificial intelligence creating an image. But this is, image of me requesting, hey, I want to see pictures of Warren Buffett dancing. And that's ultimately what I want to see with my investments. I want things that make me dance and make me think, wow, this would make a younger Warren Buffett dance. If you are interested in the stocks that I call out to my Unrivaled Investing subscribers on a weekly basis, where I'm looking for those stocks that could potentially make you dance, check out unrivaledinvesting.com. And if you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.